I'm trying to understand, yes, we've had a big drawdown, but have we priced in just how bad things are going to get in the coming months outside of the pandemic, around the earnings backdrop, around the buybacks backdrop, and around future dividends as well?
So I'd be a fool to think that I can call the exact bottom, right? And all those reasons you cited are reasons to continue to be concerned about global equities. And I think you're right to say, and I've seen a lot of people talking about this, that the regime will shift and that we'll move back towards a more fundamentally driven market. Good balance sheets, the ability to generate repeatable, consistent earnings, strong free cash flows, low levels of relative debt. All of those things I think will continue to matter. But I think it's important to remember that back in 08, 09, we came out of that with, dividends being cut, buybacks being cut. We went into an extremely low-rate environment, which allowed companies to take on debt and increase those levels of dividend buybacks, sort of financials being the epicenter of that, given the regulatory regime we're in. And I'd be willing to bet that shifts in this environment to other sectors of the economy, obviously sectors that have been hit the hardest by this, the travel and leisure sector and the energy sector as well. But those are small pieces of the dividend and share buyback, piece of the S&P 500. So I think that goes down a little bit, and you go back to an environment where fundamentals matter more, which probably means the upside potential from here is more limited than it was when we came out of 08, 09, and certainly than when we came out of 01, 02. But it doesn't mean that buybacks and dividend increases go away permanently. Jamie Dimon actually came out in his investor newsletter and said that they would continue to maintain their dividend, which surprised me a little bit, and would monitor it depending on what's going on in the environment. So those will still matter, but just less than they have in the past.
Well, John, let's read out that Jamie Dimon quote, shall we, from that 23-page letter, I think. This was the quote that stood out for many people. At a minimum, we assumed that it would include a bad recession combined with some kind of financial stress similar to the global financial crisis of 2008. Now, that sounds really, really bad. But to your point, clearly not bad enough to cut the dividend, though, because he said any such move would only result from extreme prudence. So, John, with that in mind, have we really priced in how bad this could be? Because there is someone at the top of a bank reflecting on parallels to 2008, but conceding they're not going to cut the dividend. That seems to me, watch what I do, not what I say.
Yeah, I couldn't agree more. So, again, getting back to my point about I don't know if March 23rd was the exact bottom, but I think the big difference this time is when we went through 08, 09, and I've seen actually people drawing comparisons, this could be like the Great Depression, which I strongly, strongly disagree with, is you have light at the end of the tunnel. We know that within 1 year, maybe 18 months, we'll have a vaccine, and that once we get that, people can go out and confidently do what they used to do, spend money as a consumer, run your business, bring people to work, make goods and services, and know that there will be demand for them. That seems like a long way off, but I think that in the meantime, each day that goes by, we'll get more and more used to living with this virus. Again, getting back to my earlier point about the medical profession working vigorously and expeditiously to try and find something that will allow us to treat it, live with it, maybe manage it, antibodies, immunity passports, things like that. And you've got the federal fiscal and monetary response, which is like nothing we've ever seen before in terms of the scale of it and the speed with which it happens. So I'm not suggesting things are good. I'm certainly not suggesting that we won't go through a period of pretty awful earnings as well as credit downgrades and defaults. We will. But I think it's very different than what we went through in 08, 09, and certainly nothing close to what some people are saying could be the next Great Depression.